A day ago, we had an explosion inside the crypto market and crypto has pulled back. When we were seeing all of that green fire enter the market, a lot of people, a lot of beloved global family members reached out and said, for example, Tales from the Man Cave, Ken, I would love to hear about re-entering a trade. I often do it too early. And Purpuratum said, same here, must be a lack of patience to get the cheese. In this video, I'm going to update you on these real trades that I've been doing. I'm going to show you how I've been re-entering. And look at this. This is juicy. Wow, Bitcoin Cash just plummeted. If you get excited on the red and you're going long at spot, this is excitement. This is caution. This is excitement. And this is what I really want to help you to understand. And I'll show you real examples, real trades, real money. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. If you're new, a very warm welcome and welcome back, CTKS family. Let's get back into answering this question about how do you re-enter a trade. Now, what you can see here is we've gone really green fire in Bitcoin Cash, and I was using that to distribute, to sell. We think as an institution of one, we're accumulating down lower. Now, these blue levels, they're all buys. The reds, they're all sells. Now, if you go back a couple of days in the videos, you'll actually see that's the 3.5% to 500% profit per annum. You will see 3.5% per week, 500% profit per annum. Now, what does that mean? Well, the best thing that I can do is to actually show you. And Binance has a phenomenal deal. If you're a new user, 20% lifetime fee discount. I wish I could grab that, but if you can grab it, please grab it. The link is in the description of the video. Now, you can see here, the CTKS method focus is literally 3.5% per week. And if we just get 3.5% and we roll our account over at the end of the year, we've got a 500% gain from 3.5% per week. Not per day, not 3.5% over 2 days or 3 days, but over 7 days. That is awesome. Now, these cells are a little bit variable, but generally they're over 3.5%. Sometimes they're a little bit under, sometimes they're way over, but on average, they're around 3.5%. So what you can see on Bitcoin Cash, even though Bitcoin Cash was coming down and I'm going long at spot, this is something very important to understand. And this is a 1 hour chart. So a lot of these orders are getting aggregated. So if I went to a lower time frame, you wouldn't be able to see all that, and the labels would cross across each other and get a little bit messy. But you know, the concept here is that you can see the red arrows are at the top and the blue arrows are always. So the sells there, the buys there, the sells there, the buys there. We're always seeking to get into synchronization with the market. The first thing to know about re-entering a trade, seek to get into sync with the market first. A lot of people are in a big hurry when it comes to placing a trade. They get that FOMO thing. Oh, I'm going to miss out. It's gone green fire. It's going up to heaven. And it's never coming back. It's never going to move in a wave. It's only going to go up. And here we're looking at Ethereum. So you can see my sells here, my buys down there. I'm always seeking to buy low, but that doesn't mean I don't participate. But I am very cautious when, especially after a prolonged period of green fire, to layer back in. So I get really conservative with my targets. Now, why is that? Is that a good idea, Ken? Well, let me just show you another chart. A lot of people think that they can just somehow magically sell the tops all the time and buy the bottoms all the time. It's very hard to do. And the real key is you must think structurally as well. So you can see all of this green fire in Ethereum's little baby brother, Ethereum Classic. Classic Ethereum. And what we saw was that decay in price. What if I top loaded all of these levels up here like this? I would be sitting on a way greater loss. And don't forget, I am sitting on a loss with these positions. Now, am I worried? The question is, how do I answer that question? Am I worried? Let's answer it. What a beautiful question to answer. The link for this Binance page is in the description of this video. So, am I concerned? No, I'm not concerned because I've done the cheat sheet. I've assessed the structure. I've stacked probabilities. I have a positive mindset, not a silly mindset, not a pie in the sky mindset, but a reasonable, conservative, sensible mindset. I'm buying and selling quality CTKS structure. I have a holding strategy. I'm going to hold for 7 days. I don't care what the markets do. I'm going to hold because I have already accounted for any sell-off position. Just think back to yesterday's video when I did a little bit of a masterclass on selling, preparing for sell-offs. You must prepare for sell-offs. That's what I've done. When you look at Ethereum Classic, they were sell-off buy levels because Ethereum Classic should have just gone up. But it didn't. It came down, and that's where I was buying. So I already prepare in advance. I've got my holding strategy. I've got my profit strategy. I set my targets when I do my buys because I use BNB Binance. Hang on, I'll just put this up a little bit so you can see that a bit better. And I make sure that I can automate my trades. It's very important. I don't have a bot or anything. It's just little old me just placing the buys and sells, but I do so with structural awareness. Everything is structure. And it is such a powerful thing to know the algorithmic sell and buy levels in respect to what price can do. It's just awesome. And you can always learn. You can learn to do things differently. You can learn that the charts have different patterns and different behaviors, different personalities. Now, if you're feeling completely out of sync with the market, I would suggest that you probably you're going in too heavy. So go in really, really light, even in $10 level. And you can do $10 trades on Binance. So long as you have BNB and you use it for your trading fee discount, your quantities can match. And that's what I teach. So I hope that helps you to understand when you layer back in, you just want to get into synchronization. You say, this is green fire. We have a song, a CTKS song about green fire. And it's like, don't get burnt by the green fire. It won't, just be careful. This is where all the social media influencers, they get all excited about price, and because it wasn't only Ethereum Classic coming up, it was the entirety of the crypto market. Now, let's get back into what we would anticipate in the next 24 hours. Understanding the cheat sheet, understanding the components, how they all interrelate is really, really important. We know that at the moment, gold is flatlining. Now, inside the crypto market, because row 1 and row 2 are going a little bit crazy, we have to primarily look at structure. We know the VIX is decaying at the current time, and that is very, very good for the markets. That creates positive sentiment, and positive sentiment will flow back and into the crypto market. This is nothing more than a retracement at the current time. We hit nearly 98,000. We're back to 95,323. But we must look structurally. If we just do what most people do, wait for price to print and that becomes resistance, and wait for price to print and that becomes support, that's only assuming that literally the price has been going for a couple of months. You don't want to do things like that. Price has been going for thousands of days. We want to look at all of the structure so we can see structurally at this 96,780 level, there's a lot of structure there and it was failing. We also have structural unfortunately, it's resistance because it's above the current price at around, just say, 95,500. And down here, we have a lot of structural support around, just say, 93.5, because it's probably a little bit easier to remember. Now, when we look at this kind of thing, what we're actually doing is seeking to understand where price can go. Now, if you only looked at Bitcoin, if you didn't stack your probabilities, and this is why we must stack probabilities, you would say, okay, we failed here, we retested, and we got slightly up, and then we failed and structurally targeted this level that we hit, and we've been stuck in a little bit of a range bound, but now we're entering a negative CTKS gap. It doesn't look good. Likely that the crypto market is going to sell off. If you only looked at Bitcoin structurally, that is a huge, huge mistake. Now, why is it a huge mistake? Because Bitcoin and total crypto market cap move together. Now, we can see total crypto market cap did this. The entirety of the crypto market just went crazy. Look at this. Boom. It moved up into green fire. And when the natural retracement occurred and it didn't keep on going up, everybody's like scratching their head saying, I don't know what happened. Why didn't it keep on going? Because it's all structural. This is normal. Now, let's have a look at the structure on total crypto market cap. You can see around this 3.19 trillion, which is literally where crypto is right now. There is so much structure. It's thermonuclear. This is beautiful. Now, this means from a probabilistic perspective that the algorithms on weight, en masse, are going to come in and buy these levels. They'll start there, they'll go lower, they'll support price down through there, and then they'll gap down to this one. Now, what does that mean? Does that mean that the crypto market, this is the bottom, and it's going to shoot upwards? Well, perhaps. But the issue is, this is good. This is a buying opportunity because the probabilities are on our favor. They're on our side. And why did the crypto market sell off? Look at this overhead structural resistance on total crypto market cap. It came in here, whacked this, and then just basically failed because it did too long a sustained move through too many sell areas and got whacked right there. It has to come back, it has to chill, sit down by the pool, have a beer, have a wine, have a cocktail, whatever it does, and it needs to regain its strength. And that's what it's currently doing at the current time. This, to me, is a really, really good sign. But Ken, there's so much global uncertainty. There's so many things happening in the world. It's always on. So coming back to Ethereum Classic, what we saw is total crypto market cap just pushing through all of that overhead structural resistance and then getting tapped out and coming back to structure now. Being able to read through charts is wildly important. The crypto market is very forgiving, and so long as you're buying effectively each time, you're going to do really well. When you look at all of this red price action inside the market, it's nothing to be concerned of. It's something to be excited about, because just as retail, and retail just means emotional, retail emotional traders and investors get really excited always on these green pumps, and this is where they buy. Institutional traders and investors get really cautious on green pumps, and that's where they sell. It's a very different attitude. Retail traders and investors are always trying to buy every bottom and sell every top, and they don't know structure at all. We don't care. We don't care about missing out. We don't care about missing moves. Let's have a little look at XRP. We're always seeking to buy into weakness. We're going long at spot. So we're buying in a specific situation where the price is downtrending, and we'll distribute when the price comes up because we know price is always moving in a wave. And this decreases your risk exponentially. So what, unfortunately, retail traders and investors, they top load up here and they sell at the bottom, at the bottoms, local bottoms. So what they do is actually flip the script. And they get really upset if they don't get the absolute tip of price. They look at it and say, oh, I'm a failure. That's retail trade perfection. I talk about that extensively inside week 1 of the Profiting Masterclass. RTP, or retail trade perfection, is the thing that decimates portfolios and sets you up for losses. So one of the things that you can see here, this is Solana. I was really cautious when we had this big explosive green fire. I was anticipating that total crypto market cap would come back and tap its own structural support. And it's starting to do so, but it's starting to do so here. This is like the looking through charts that I talk about extensively in the Profiting Masterclass. It's really important to do. So when you're looking at something, you can just look at this area. That's kind of the tip when total crypto market cap hit its overhead structural resistance, and now total crypto market cap has hit its structural support. But what are we doing here? Like, if you have a look at Solana, we're selling, we're buying back, we're selling, we're buying. We missed that one, that's okay. We're selling, we're buying, and we're selling, distributing, and we're waiting a little while because we're being a little bit cautious, being conservative. We just want to not get burnt by the green fire. Remember that CTKS song? We want to buy effectively, and we do not buy emotionally. And we know that total crypto market cap structure is getting hit, and there is a lot of it. So in that sense, I'm very comfortable and confident at the moment. Does that mean it can't just crater like this? Sure, it could, but the probability is low. Is the probability high that it goes up? Yes. Now, where could it go to? That's the next critical question. It depends on structural passes on Bitcoin and total crypto market cap. Keep that in your radar, on your radar and in your focus. This is another interesting chart. So ADA, you can see my buys, my sell, my buys, my sells. I had to hold on to these positions for quite a while to get rid of them. And when I mean quite a while, just a couple of days. But the issue is that you may need to hold a couple of days to churn and burn a position. Now you can see ADA here. ADA didn't have the kickback that was sufficient to sell these levels. That's okay. I'll just accumulate. So what we're looking at here is that it might take a little bit of time for ADA to come and do its thing. But if the entire crypto market starts to come up, all of these levels will sell. Let's look into Doge. How did Doge go? So our buying, you can see that there's a fairly consistent process. It's like buying lower, selling higher. And a lot of people will say, Ken, of course, that's what you're supposed to do. But actually, it's not what most people do. Most people buy when it comes up like this and then get trapped buying, or trapped buyers right up here. Remember, each one of these is a real trade. This is not play money. This is actual real money, real dough. Now, what we saw here was I was placing my levels lower on Doge, just expecting a bit of volatility. And we've nearly done a full retracement on this. Welcome to crypto. And this is exactly why the CTKS method works, because it's taking advantage of these waves of price and all of this volatility. In answer to this question, Tails would love to hear about re-entering the trade. Okay, so what you've seen, I re-enter trades conservatively. I look across the structure of all of the charts that I'm putting money into. I will not put a buy level or a sell level into a chart unless I know the structure of that chart, just like we showed on Bitcoin and total crypto market cap. And also, when it comes to re-entering a trade, it's very important to have your process. If you've got your process, if you're assessing the cheat sheet, and the cheat sheet is a little bit wacky at the current time, but that's okay because that is also a signal. The signal is to swap structure with the cheat sheet, to just even put more understanding and more focus into the structure of the charts and intercorrelation and stacking probabilities and reading between charts and doing your independent targeting. There's so much that you need to do. And everything, ultimately, everything is structurally based. And that's what we're selling and buying as well. We buy the quality CTKS structure, and you can see that the total crypto market cap is coming into quality CTKS structure. Wow, what a great time to be in the markets. But unfortunately, a lot of people will tend to buy up here and sell down here or get really panicked. And they won't have a positive mindset, they'll have a very negative one because their process is actually working against them. And that's why I share these real trades with you. I really hope it helps you out. And of course, if you have any questions or anything that you would like to understand, please let me know in the comments. Just always remember that you don't have to make big percentages to make big percentages. Just 3.5% per week is a 500% gain per year. And we're going long at spot. I'm not using any leverage to do anything that I'm doing. It's very important to move from the emotional mindset into a structured process mindset. You don't want to be following the crowd. The crowd is typically wrong. If the crowd is retail, and the crowd is retail, you don't want to be following it. They'll lead you straight off a cliff. If you're getting emotional or angry or blaming, that's emotion, and you want to get rid of it. If you're doing recent indicative price and not marking up the actual structure with level 1 and level 2 standard certification, you do not know where the algorithms are buying and selling. And it's very important to just look more broadly than the chart that you put money into. When people get into markets, they've got one chart, they apply technical analysis to that chart, and they say, I know everything that I need to know. They know literally nothing. They need to look across charts, and price reality is the only reality. Understanding that charts intercorrelate and interconnect, and they go in specific directions. And always do your three-dimensional risk management. There's nothing wrong with being conservative first, getting your confidence up, getting your synchronization with the chart, and then you can, if you want, you can lay in or scale up more heavily at that stage. But just take your time. And of course, we go long at spot. We don't use any leverage. We don't do the gambling and the luck, and we don't have unrealistic fantasies. We're not emotionally driven. We do not listen to the noise and hype. We just disregard all the stories. We only focus on CTKS structure. This is just a really good way to go, and we're not impatient. Impatience is a big problem inside the markets. If you just do the kind of trades that I'm doing, just structural trades with coffee money, you can do it from as little as $10 to get yourself into the market, to get your choice of the chart correct, to understand the price reality. You're going to do really well because you'll follow the action of the chart and say, now is the time to get in with a degree of weight. So hopefully that helps you out. This week has been an absolutely beautiful week. Kate and I love to answer your questions. Our focus is to help you to profit in investing and trading in any market conditions by understanding what you're doing from an institutional perspective. If you have family and friends that invest and trade, please let them know about our community. They can actually reach out. This is like a private community that I'm doing publicly. It's pretty awesome stuff. And we're doing it for the most awesome people on the planet, our global CTKS family. Thank you for being here. Very grateful that you've been watching this. And if you have any questions, I have literally 4 decades inside financial markets. My background is in finance. As a former lecturer in statistics, I have a very good idea of what things actually mean mathematically as well. And I come at everything from an institutional perspective, and I really want you to understand. So if you have any questions, or your friends or your loved ones have any questions, please just pop them in the comments and I'll get to them. I love answering them. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.